Ladies and gentlemen, here to present how to leverage Heiken Ashi bars for maximum gains is Mr. David Wise of Right Line Trading. Welcome back to Traders Corner, David.
Thank you very much. So I appreciate very much you hosting me today. Just got done listening to Oscar, and I will say right off the bat, I will reiterate what he said. I get the same kind of comments of people thinking the market was going to just fall apart, crash, keep going down, and it's not. I mean, technically, it's still set up beautifully. The SPY has been bounced right off the 100-day moving average, got through up to the 50-day moving average. So the market is still bullish, very bullish, and most of my positions are long right now. So I just kind of reiterate that. So again, good afternoon, everybody. Thanks so much for being here at Traders Corner. Again, my name is Dave Wise, and I have a trading room called the Compass Options Trading Room, and I have a text alert service. That Right Line, I use the Right Line Compass software. This I'm gonna talk about. Today we're going to talk about using Heiken Ashi candles to improve your trading, basically to improve over basic candlesticks, and I'll go over that and show you how you can, if you haven't used them, how you can improve your trading by using Heiken Ashi candles under specific circumstances. All right, so we'll get started here. Again, I've been trading for about 14 years, almost 15 years full time. Professionally, and basically I trade almost exclusively options. I do use some stocks sometimes if the options are not usable, but mostly options. So we're going to stick to that. All right, first thing I have to do, of course, is the usual disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right, so we're going to go ahead and just start here. And if you have any questions, if you put your username, your name or your Skype username and your phone number in the chat box or the question box, Rory from Right Line will get back to you if I can't answer it. But I'll keep the question box open in case folks have questions as we go along, and I'll try to answer them if I can at that point in time. All right, so just you can remember to put that in there. This is just kind of a graphic of what's called the SPY super system. It's a system I use for intraday trading of SPYs, Qs, IWM, etc. But this is kind of what it looks like on my Thinkorswim platform. I use Thinkorswim for the Compass system. I don't trade on Thinkorswim, but I use Thinkorswim to display the Compass system, which tracks institutional money flow. And you'll see some of those charts as we go. This is what the text alert service looks like. I do text alerts on very high probability trades. I text them out. They usually get them about 15 seconds, 20 seconds after I post them. They'll come out to your phone, and I'll go over exactly what you're going to get on those texts. All right. The first thing I always cover, and I want to just cover this kind of briefly. The first thing I always cover is what moves the market. It's really important to understand what moves the market. These little marbles right here are retail traders, such as you and I. We're just retail traders. And it's very important to understand that we as retail traders, no matter how big a retailer traders are, we cannot move the market. We don't create trends. We don't stop trends. We don't do anything except cause chaos and chop if we're the only ones in the market. This is what drives the market. This is the institutions. And the institutions are made up of investment banks, Goldman Sachs, JP Morgan, Chase, Morgan Stanley, all the big investment banks who have trade desks, and they also have what's called algos, or computerized systems to trade the market. Algos are very active in the market, trade about 80% of all the trades that take place. So when the institutions are in the trade, it's imperative that we as retail traders know if institutions are in the trade or not. If they're not in the trade, we don't want to be in the trade. Because we're just fighting against retail traders. If they're in the trade, we want to be in the trade because we can follow them and take money from other retail traders who don't have as much information as we have relative to whether the institutions are in there. So this is really a critical component. It's really important to understand that as a retail trader, we don't take money from institutions. We take money from other retail traders that are in the market, not knowing as much as we do. Or at least don't have the information that we have. All right, so this I'm just going to run quickly. This is a SPY. These are regular candles on the SPY. This is an older chart, but I just want to show you the difference between SPY regular candles and Heiken candles, and then we're going to get into some real detail on that as we into the webinar a little deeper. But this is basically a SPY chart. I use TC2000 for my charting program, but these are SPY candles. These are regular SPY candles, daily candles. Each one of these candles is a daily candle. Each one of these is a daily candle. This is a little bit later after we had a little pullback to the 50 or the 100 EMA, but that's a little while back. It's actually the 100 SMA. But see, this is what regular candles look like. This is what Heiken candles look like under the exact same circumstances, and you can see that how smoothly they show the trend. And we're going to go over exactly how they're constructed and why they look different than regular candles do. And again, here's some more Heiken candles. You can see how when it gets bearish, you can see how easy it is to see the trend with these Heiken candles. All right, so just so you can see what the candles look like, we're going to get into a lot more of this as we go along here. All right, so in my room and in my alert service, I have rules to trade by. Two of them, basically. We trade the best and skip the rest. And this sounds easy. It's not easy, but trading the best means we're only in trades that institutions are in, plus some other criteria that I'll lay out. And we skip the rest. So we're not taking a lot of trades. We're taking a small number of trades, depending upon the market conditions and the particular stocks that we're looking at. But we only trade the best and we skip the rest. We also, our objective in the room and on the alert service, it's not to make trades. Our objective is to make money. We make money by taking only the very best trades. And the reason I say this, and I say this in the room a lot, is to keep people from feeling like if I'm a trader, I've got to be in a trade all the time. I always have to have a trade on. You don't have to always have a trade on. Sometimes no trade is the best trade, and it's best to sit on your hands. Just turn your computer off, walk away. Don't be taking trades just to take trades. So that's very important. That's where our objective is, not to make trades. Our objective is to make money. All right, and we also need an edge. Profitable traders, we need an edge over other retail traders. That's important. All right, so our edges is I use the right line compass system. This is a piece of software that runs on, in my case, it runs on thinkorswim. It also runs on Ninja, but I don't have to trade off of thinkorswim. I'll run the software on thinkorswim to identify compass. The compass will identify whether the institutions are in the trade or not, but I don't have to trade off of a compass system. I actually trade off of Tradier using TradeHawk as a front end because of the low commissions. Then we also trade relative strength and relative weakness. This is not to be confused with RSI. This is what this looks at is how are the stocks that you're looking at, how is it moving in relationship to the SPY, to the S&P 500. If the SPY is moving sideways and down on 5-minute candles and your stock is moving up, it has relative strength, and vice versa. And this is really important because if you get into a trade and the trade reverses on you or the market reverses on you, your stocks with relative strength are not going to fall as fast as the market's falling, which means it's going to mitigate any kind of losses that you might take in that position. Okay, we want to trade with the market trend if there is one. Some days it's choppy, some days there is no market trend, but the market trend right now on the overall daily chart is fairly bullish. So that's how I'd be leaning. And then we want to buy near support and sell near resistance. This is important. Don't be chasing trades. Don't be trading. People get fear of missing out, FOMO. They'll run into a trade when it's and get caught, and they buy it right at the highest level and have it fall down, or sell it right at the lowest level and have it bounce up. So wait for supporting resistance. So this is the edge that we have over other traders. Okay, this is just kind of an overview of the compass system. This is a system I use on thinkorswim to give me a lot of information that I need to make these trades. It identifies the highest probability trade setups while sidestepping setups that look good but will fail more often than they succeed. You can have a really nice looking technical setup, and if that technical setup isn't supported by institutions, it's not going to succeed most of the time. You can get some winners, but you're just not going to have a very high win rate. And it does this by identifying when the institutions are in a trade, when they're driving the move, and when they're not. So this is a really critical piece of information. I'll show you how easy it is for the Compass system to identify it, even though it's analyzing extremely complex data, and to display the results so that you see them easily. And it's displayed visually, basically with colors. So it makes it possible for even new traders to find high probability trade setups when they occur, and when they're not high probability trade setups. All right, and so again, this is how we get an edge over retail traders. I'm emphasizing this a couple of times. We only take trades that are being driven by institutions. This is critical. We trade stocks that have relative strength or relative weakness versus the SPYs or the Qs, and we trade in the direction of the overall market. This kind of information, if you're trading these kind of stocks, your win rate is going to be relatively high. I mean, it's compared to what other folks get, it's going to be relatively high. I mean, I typically keep an 85 to 90% win rate month after month, year after year, by sticking to this level. But you know, I mean, you're also relying on technical analysis, etc. So again, our trades will be supported by institutional buying and selling. The stocks will be outperforming the index, and they're going to be moving in the direction of the overall market. Big, huge edge. I mean, this is going to jack you up to a 75 to 80% win rate just following these particular criteria. All right, this is just how to find a high probability trade. This is what I use in the room. This is what I always use trading. These are the criteria that I look for. I call it a trade funnel. It's obviously just a thought process you go through, but this is a critical thing. If you're going to go long a stock, you want the daily chart to be bullish. You don't want to be going long a stock if the daily chart is bearish, because what happens is you can't really stay in the trade if it goes against you. If you have a daily chart that's bullish and the trade goes against you a little bit, but the daily chart's still bullish, you can hold on to it during the day. You can hold it overnight. You can hold it for a week if you need to. So the daily chart and the 5-minute chart both need to be aligned in the same direction that you trade. Obviously, you want to trade with the trend, either both the stock and the market, if there is a trend. And then critical, you've got to have the compass indicators aligning. And I'll show you the compass indicators and what the alignment, how you identify the alignment. It's very, very simple. And then you want to trade relative strength and relative weakness, as we've mentioned. And you want to get in near support and go long near support and go short near resistance. So you're close to a nice, close by support or resistance level, so you can reduce your losses on the trade if it turns against you. All right, so again, and this is just, this is basically the funnel written out. The stock to be traded need to have the 5-minute and the daily chart aligned, and the compass indicators must align. I'll show you these as we go along, but these two things here will give you, this is enough to give you a winning record right here. And again, relative strength, you want to trade. On 5-minute charts, it's important to understand there's a level called the VWAP, or an indicator called the VWAP, volume weighted average price. Volume weighted average price is something that all the institutions use. It's the levels they use to get in and get out of. So it's very important to know where the VWAP is on a trade, and you can have that on your charts. I have it on all of mine. And if you're going to go long, the stock price should be above the VWAP. If you're going to go short, the stock price should be below the VWAP. This is really important. And again, enter the trade near a confirmed support for long and resistance for short. And have patience. I mean, this is really important. Have patience. I also look for nearby support or resistance, so I know how much space do I have before the stock's going to run into a support or resistance level. Do I have enough room to the next level to justify taking the trade? And then have patience. This is probably the hardest thing for traders to do, which is to basically sit and wait for the trades to come to them. Okay, the strategies that we use in the room, relative to options, I do straight calls and puts a lot. I mean, there's going to be a lot of straight calls and straight puts. This is probably 70% of our trades. I do use debit spreads, and I use weekly options expiration to do debit spreads. I do something called a time spread over earnings. It's a calendar spread. This is a non-directional trade that captures volatility crush when the earnings come out. And I have videos, by the way, on all of these strategies in my room. And I use another one called the weekly ATM. This is a strategy where I sell puts against a stock that's neutral to bullish, and I sell them every week, while maintaining a longer term dated put to protect that downside risk with that trade and keep my margin down. This is a pretty nice strategy on bullish stocks or even neutral stocks. If you can capture the proper premium, again, I have a video on this. And I use credit spreads to capture premiums over a few weeks if the market is correct. The thing to understand is when you have if you have a trade, you like a stock long, you have several options. You can take calls, you can do a debit spread on it, you can do a weekly ATM, or you do a credit spread on it. You can do all of these strategies, in which what I try to do is, if I like a stock long, I'm going to suggest what I think is the strategy that's going to produce the best ROI for the conditions that exist in the market right then. And then I have one other thing called the SPY super system for very high probability trades. This is not alerted on. These, you have to be in the room to get these SPY super system trades. And this is a system that's really works really well for SPYs, Qs, and IWM. I use it for all three of those indexes. And I'll give you a brief sample of that. But you need to be in the room to get these. But this is great for people who can't be in the room all day, but they'd like to be able to trade the indexes. So these trades only last, most of the time, they only last a maximum of 15 or 20 minutes, maybe a half an hour at the most. And you only have one trade on at a time. Easy to manage. You just wait for them. If you can't be in the room all day, you come in for an hour, you trade a SPY super system trade, you leave, you come back in the afternoon, you can do another one. So that kind of makes it nice so you don't have to sit there and stare at the computer all day. And I do them all the time. I did 3 of them today, 3 of them yesterday. All 6 of them were profitable so far. I got a very high win rate on these things, but they're very specific. All right, so the Compass Alert Service, just to be aware of what it is, obviously it's designed for day trades and short-term swing trades. Anything that I put out is going to either be closed today or in maybe up to 3 weeks. That'd be the outside length. Most of them are going to be closed in a couple of days, 2 days, 3 days, maybe a week. And a lot of them will be in at 10 or 11 in the morning and get back out at 3 o'clock in the afternoon. It's designed for traders who can't watch or don't want to watch the market all day long. I mean, that's probably a lot of people. They don't want to sit in the front of the computer all day, so they get an alert to tell them to go into the trade, and they can trade off of that. And the real-time alerts are going to come out in the highest probability trade setups that I can find. So every high probability trade setup that's alerted is also posted in the room. And I take every single one of the trades that I call out and send alerts on. I take them all in real money on my trading account. So I always know what all these positions are doing because I'm in them all with live money. And again, how do we alert on these? We're looking for the highest probability trades by identifying institutional involvement. Is that institutional involvement again? We've got to know that the institutions are in there. We also look at market internals, which is what's the volume of stocks going up versus the volume of stocks going down for the day. And then I do deep dive into technical analysis to come up with these picks. All right, so that's what the alert service is for. It's for people who obviously would just like to trade but don't want to have to watch the market. So when you get an alerted trade, this is what it's going to look like. You're going to get the stock symbol. You're going to get the option strike price, the option expiration date, and the price to pay for the option. All the things you need to make the trade. And most of the time when I alert these, I send out an alert with the buy price. I'll tell you how much to pay for it. And then you'll get an alert later, either later that day or 1 or 2 days later, when we've decided where we want to try to exit that trade. And when I give you the alert to exit the trade, I'm going to suggest that you make it GTC, or good till canceled, so that it's working when you're not in front of your computer, or when you're not when the market opens in the morning. You want to have that alert working. You want to have that trade working. So if the market gaps up in the morning and you're in a long, you'll get filled on it and you won't have to worry about it. But you'll generally get two alerts, one to get in and one to get out. And the price to pay, by the way, could be a range. It could be like $1 to $1.05 or something like that. This is an equity curve of what we've done in the Compass room. Basically, this assumes $2,000 invested in each trade. I have to have some sort of a baseline that I can use to quantify the results. So this is basically what it looks like for the last, I guess about 14 months or something like that. So yeah, we listen. We make money just about every single month. The room has been open since January of 2022, which was, by the way, the exact beginning of the bear market. We had 16 months of a bear market, and now we've been moving up since then. And this is 32 months of trading, and we've had 29 winning months and 3 small losing months in those months. But that's just to show you what the equity curve looks like. You really want one that goes from the bottom left to the upper right. All right, now we're going to get into Heiken Ashi candles. I'm going to do these now before I get into the results of the room or the compass system or anything. I want to kind of highlight Heiken Ashi candles. Now this is the my Thinkorswim platform. This is what the compass system looks like. This is a Tesla trade we took a while back. But just to show you briefly what the compass system is, you have 4 indicators down here that are critical. But the 2 most critical indicators is this one here. This is what's called the multi-time frame trend, and this is what's called the current time frame trend. This is current time frame multi-time frame momentum, current time frame momentum. This is a long-term trend, and this is a derivation of money flow. These are the 2 critical ones. The momentum is really, really critical. These are the ones that I key off of the most. But this kind of shows a Tesla that I traded this, and this is a 5-minute chart here. And this shows where I actually get into this trade. But these are Heiken Ashi candles. And the one thing I want you to notice on these, and you'll see these when I show you some more charts, you notice on bullishness, you see how these have a wick and a tail, and a wick and a tail, and then a flat bottom, and a flat bottom, and a flat bottom. When the stock is bullish, with Heiken Ashi candles, the bottom of the candles will always be flat. You won't have any tails on them. It's known as flat bottom, flat bottom, flat bottom, flat bottom, all the way up. This is a bullish trend. Very easy to spot because you have flat bottoms all the way up. Now, once you start getting wicks and tails, if you were in this trade, this is where you would consider exiting to take your money. But this is what the compass system looks like here on the colors. You can see the institutions are buying the heck out of this thing. On the compass system, this little green line is the 15 EMA. It's one of my support levels. And these pink candles here, pink arrows, those are what's called pop out of the box symbols. These identify when a stock is breaking to the upside out of compression. We have blue ones breaking downside. So this is what the compass system looks like. And these are Heiken Ashi candles, which we're going to go into right now and talk about Heiken Ashi candles. All right, so what's the advantages of Heiken Ashi candles? Well, they identify the confirmation of a trend reversal. This is really important. When you're in a trade, and the trend starts to reverse, you want to know about it, but you need some confirmation. You don't want to get shaken out on just a couple of small little candle. So it's going to identify confirmation of a trend reversal. It allows trade entries on a confirmed reversal, avoiding failed breakouts. Now, this is if you have a trade breakouts or breakdowns, then you're looking for a resistance level, for example, or a support level to be broken. But a lot of times they'll break out and then come right back and test or break right back down through them again. And what they're called is failed breakouts or failed breakdowns. By using Heiken Ashi candles, when you get a Heiken Ashi candle and you break through resistance, and you got a Heiken Ashi candle that's showing you bullishness, then you have automatically got a confirmation that that break has been confirmed, as opposed to with regular candles. You have to wait for more regular candles. So if you get a breakthrough resistance to the upside and it's a Heiken Ashi candle with a flat bottom, that gives you a confirmation of a breakout. It smooths out the price movement to eliminate noise, which we saw in that Tesla chart we just looked at. It allows the traders to stay in the trend trades longer, avoiding shakeouts. Again, if in your trade and you're worried about getting shaken out, stick with your Heiken Ashi candles, because until if you get flat bottoms and you keep getting flat bottoms, there's really no need to exit the trade, even if it looks like it's getting a little shaky for you. It identifies when the trends are starting to wane, and this is important. Once the trend starts to wane, that and you're in profits, that's when you want to start to get out. And it makes it much easier to visualize the current trend, as we saw on that candle. All right, so these are the advantages of Heiken Ashi candles over standard candlesticks. If you haven't used them, I'll just say, if you haven't used them, you may want to try using them. Every platform allows you to put Heiken Ashi candles instead of standard candlesticks on there. And you can switch back and forth. I switch back and forth all the time. Heiken Ashi candles, it means average bar in Japanese. The reason it smooths out the price action is it uses 2 candlesticks to create one candle. So it makes it easy to identify trends and reversals, makes it much clearer. Again, bullish candles, bullish Heiken Ashi candles have flat bottoms, and bearish Heiken Ashi candles have flat tops. This is all you really need to know about how the candle is constructed. Again, bullish trends will have flat bottomed Heiken Ashi candles one after another, and bearish trends will have flat topped Heiken Ashi candles one after another. And once you start getting a couple of Heiken Ashi candles with flat bottoms or flat tops, typically you'll get more of them in a row. And again, generally you can stay in a bullish trend as long as no flat top Heiken Ashi candles appear, indicating a lull or reversal in the trend. And we'll look at some specific candlesticks. Again, reversals in a bullish trend. So if you're moving up and you've got flat bottom candles, reversal in a bullish trend will have flat bottom Heiken Ashi candles followed by smaller doji Heiken Ashi candles, sometimes, both having wicks and tails, followed by a flat topped bearish Heiken Ashi candle. So you go from a flat bottom to a flat top. That's a reversal in the trend. And you'll be able to see that pretty clearly when I show you some of these charts. One of the things to be aware of, and I'm not going to read everything here, but one of the things to be aware of is if a trend is very strong to the downside and to the upside, you're going to have fairly large candles. They're going to be fairly long. The reversal in that particular trend shouldn't be considered reversed until you get some large candles that offset those large candles coming down. So if you've got large red candles coming down, you don't want to consider that you've had a reversal if you're getting tiny little bullish candles trying to reverse it. You need some momentum in those candles, some force in those candles. So we'll look at some of those. Again, I create a lot of Heiken Ashi setups, and I've had great success, around 90%. And the reversal is identified after the current Heiken Ashi candle closes, or whatever time frame you're using, whether it's 5-minute or daily. Typically, once a Heiken Ashi candle starts to form, if it forms a bullish Heiken Ashi candle on a 5-minute candlestick, once you're 2 minutes or 3 minutes into that time frame, generally, if you've still got a flat bottom, it's going to stay that way. It's very unlikely for it to reverse later into the candle. So if you want to be aggressive and you're trading off of a Heiken Ashi candle, you can get into it before it closes, as long as you've given it enough time to get near the close. Okay. And this is basically what I'm doing here, is saying Heiken Ashi candles can be used for your trading, but you also want to make sure you take relative strength into consideration. Make sure that the institutional traders are in the trade. In other words, don't use Heiken Ashi candles or any indicator by itself. You've got to take other indicators into consideration. The market trend, how much of a trend is there? Is it choppy? All of those things need to be taken into consideration. But the Heiken Ashi candles gives you an extra edge over the normal way of trading. Okay, so let's talk about Heiken Ashi candles here. And that noise you hear in the background, I forgot to turn my news feed off. I have a news feed going all the time. So these are Heiken Ashi candlesticks. Now you notice here we've got a flat top. So this is a bearish Heiken Ashi candle. And now we have wick and a tail and a wick and a tail. Now notice it's still red, and we haven't reversed. And then we get another flat top Heiken Ashi candle. So this isn't a reversal. This is when you see a candle like this, where you're already in a bearish trend, and then you get a wick and a tail, and then another flat top. That's a continuation Heiken Ashi candle. That tells you that the bearish trend is still continuing. And then you notice you keep stacking these red candles up with mostly flat tops on these things. Now we're starting to get wicks and tails, and the candle's getting green, but still wicks and tails. This is not something that tells us we've had a reversal yet. But here, on this candle right here, you see this, you see the wicks and tails, see this flat bottom? That's a flat bottom. That is a Heiken Ashi reversal candle right there. This is going from a bearish trend to a bullish trend to the upside right there on the bottom of that candle. And you notice that the next one and the next one and the next one and the next one all have flat bottoms. This is a bullish trend right here that you're in. Now, one little side note here. You notice that the each candle starts in the middle of the previous candle. You always start the current candle on a Heiken Ashi. It's going to start in the middle of the previous candle. That's the way they're constructed. All right, so that's one thing to be aware of. All right, so this is what they look like. So let's look at some of them here now. This was the Tesla one that we saw here. Again, here you can see the Heiken Ashi reversal right there in this candle right here. Flat bottom after a wick and a tail, and flat bottoms all the way up. And the compass system tells me the institutions are in there, so that criteria is taken care of. I know the institutions are in. I know them above the VWAP. I know them above the 15. This is a perfect setup to make a trade. This was a Heiken Ashi reversal on a daily chart. All right, this was Gilead. We took this a while back. Right here, we had some wicks and tails on these candles, right here, and then we got a bullish, flat bottom Heiken Ashi bullish candle. Great place to take an entry on even a swing trade or something like that. Same thing here on GE, right? Just choppy, choppy, choppy. And we had earnings, flat bottom. This is where we get into the trade right here in this flat bottom Heiken Ashi candle. This tells us that we've got the Heiken Ashi candle, and we've got institutions buying here. Notice institutions buying, long-term momentum, current time frame momentum tells us to buy. And we bought this and used this to the upside. Really, really nice one on GE. This is Heiken Ashi candles on my TC2000 chart that I use. I draw some other lines. This is called an algo line. This is a line that the institutions actually use to make a determination when to get in and get out of a trade. This white line is the 8 exponential moving average, but the whole key here is this is Heiken Ashi candle right here. I got wicks and tails chopping around. It breaks above this line, and I've got a flat bottom. This is where I took the entry in IBM right there. So that was pretty nice. Teva, same thing. Coming down, see this flat top, flat bottom with a big candle. Beautiful reversal candle. Bought Teva right there, and it was another nice long trade. Okay, so that's what Heiken Ashi candles look like. So I'm going to look at some live charts. If you don't mind, I'm going to go and pull my TC2000 over here for a minute, because it'll be easy to see on TC2000. Pop this here. Pop this here. What I did was I just ran a scan on Heiken Ashi reversals on the daily chart for today, and want to see what we've got here. All right, so here's Tesla. All right, so here's Tesla, which, by the way, I'm in right now. You see this flat bottom candle right here? After a wick here, we had a flat bottom here, then a little wick. You see these tails down here. This is a reversal, Heiken Ashi reversal on Tesla on the daily chart. All right, so that's a good one. There's ASTS, another Heiken Ashi reversal. Pretty easy to see with big volume as well. Big volume on this, and that's what this volume candle is. And moves up pretty nicely here. All right, so that's ASTS. So I just want you to see what these Heiken Ashi reversals look like. Cisco, big Heiken Ashi reversal. This is off of earnings, not something that you would use because it's kind of a one-off as far as earnings are concerned. Walmart also had earnings, a big one today. But there's a little one here on Sophie, moving up. And again, you can't take these in isolation. You got to look at where your moving averages are, what the rest of the technicals look like. But they identify really quickly stocks that you would want to take a long in. Here's a stock here that's done what's called a PBO, a pullback opportunity, bouncing up here, right off the 8 exponential, which is this white line that I use, pops up. All right, so this is what they look like. Let me see if I can find some bearish ones here. Let's see what we get for bearish reversals right here. Bring that list up, pull it over here, and show you the bearish ones. See what I got. I haven't even looked at this, so I don't really know. Right, there's Grab. That's off of earnings, 815. Google is definitely getting a bearish reversal. They had some problems with the Justice Department here, and you can see the reversal here today. That's another Google. MLCO, another bearish reversal. You see the flat top here. Another Heiken Ashi reversal here on IQ, some very cheap stock. So this shows you what these Heiken Ashi candles look like. You can see when you get these candles in a row. Now, just for your information, my color schemes here. When in my TC2000 chart, when I color my candles, if they're pink, it means that's a red candle that's breaking out of compression. Blue is a green candle that's breaking out of compression. All right. All right. So let me see if we have any questions before I keep going. Do I hold when the wicks are chopping around waiting for a flat top or a flat bottom? Well, if I'm in the trade, if I'm in the trade, I'm going to hold the trade as long as I'm getting flat bottoms. If I'm getting wicks and tails, then I've got to kind of make a determination based on, am I in profits right now? What's the profit look like? Where are my resistance? Where is my support level? Am I close? Most of the time, if it's a choppy market, I'm going to take profits as soon as I go from a flat bottom to a wick and a tail. One thing to be aware of in Heiken Ashi candles is if you get a flat bottom, which is bullish, and you have a wick on the top. On standard candles, when you see a wick on the top of a candle, it tends to be bearish. It tells you that people came in, they drove the price up to a certain price, then they dragged it back down again, so there were sellers coming in. That is not the case with a Heiken Ashi candle. Wicks on the top and Heiken Ashi candles are actually bullish as opposed to being bearish. All right, so I'm just running to see if I can see any more of these. I want you to see what they look like. You see these? You can see these nice when they reverse here. You see this nice reversal right here? See how they repeat? Flat bottom, flat bottom, flat bottom, flat bottom, flat bottom, flat bottom, and these daily charts. And now you're getting a little bit of movement here, but if you were using like the 8 exponential as your stop, you just stay in the trade. So you usually get a lot of these in a row, which means you can stay in the trade. Look at this next, all right? Here's your Heiken Ashi reversal right here, right off of this candle. If you get here short, look at what you made on this drop. This is a big deal, and these are big flat top candles. Bearish trend, a huge bearish trend. So we're getting a reversal here, and that's a Tesla Q BDX. So these are what what they look like. You can see the nice run up here, nice run up here. So it runs up and then it goes compresses, runs up again, and now it compresses. Now it's turning short again. So you got to take other things into consideration, but the candles themselves are very, very useful to identify reversals in trend, which is what you're really looking for. You're looking for a reversal in a trend, or if you're in a trend, you're looking for a continuation in it. And the Heiken Ashi candles will give you a lot more of that than standard candles will. All right, so those are some charts that are live. Those are just today. Those are charts that I just scanned today. All right, so see if we have any questions on Heiken Ashi candles. I hope you can see that it's going to help you identify trend reversals and when to get into a trend and when to get out of a trend. They're much easier than trying to find regular candles to do it. And I think if you use Heiken Ashi candles, you're going to find them extremely useful in your trading. All right, so let me just spend a little bit of time on looking at the trades that we've taken. These are in the room and in the alert service. We take more trades in the room than we do in the alert service because if I have a trade and it's only going to be on for 20 minutes or half an hour, I don't alert for it because it doesn't give the alert members time enough to see it react. So mostly when I send an alert out, it's going to be for a few hours at least, or overnight or a few days. But anyway, these are the January trades, and a couple of reasons I show these is I want to show what kind of percentage gains we make on the trades that we take. You're not making 500% of the trade if that's what you're expecting. If you go someplace and they tell you they make 500% of the trade, I would run the other way quick, because if they do, they're getting one win out of about every 300 trades. It just doesn't happen that often. So this is what you're going to see. You're going to see wins of 10%, 43%, 37%. These are typically what you're going to see in your alert service and in the room. You're going to see wins from 15 to maybe 50%, 60% sometimes. This was 65 on Mara. We did have 96 on Boeing. This was a pretty nice trade. And we have losses. Everybody has losses. We have losses. In January, this was January 2024. 20 wins and 2 losses, 90% win rate, 2,000 invested in each trade, netted $7,505, which is pretty good. And you know, it depends on how much you're putting into a trade. I just use this as a baseline. You know, you can trade 500, you can trade 1,000. I have people in the room that trade 10,000 a trade, but this tells you as for investing 2,000, that would have made 7,505. February, again, see the percentages. 40%, 25% is flat, 56%, 32, 32. Again, nothing huge, but these are really nice, consistent trades. And to be a consistent winner and a consistently profitable trader, you've got to have consistency, month after month, week after week. And I think we do a great job of doing that. Again, we had 24 wins and 2 losses. This was a 92% win rate. This was a very good month for us. The market was strong. We could stay in the trades a little bit longer. 2,000 invested in each trade, netted $11,745. A pretty nice month. And I broke out the alerted trades in February. We had 20 wins and 2 losses. 2,000 invested in each trade, netted $69.30. Pretty good. That was up February. To recap all of 2023, everybody asked me how much. What about last year? This was our 2023. Was using 2,000 per trade. In 2,000 each trade in the Compass room produced a 60,000 in profit. So if you had a $50,000 account, just an arbitrary number, each trade you taken at the beginning of the year would have used 4% of your account balance. And we produced 120% return over the year, so the account would have ended with about 110,000. So at the end of the year, every trade you took would have only used 2% of your account balance. So, or you could have increased the amount, however you want to do it. But that just shows you the nice results we had in 2023. This is our first quarter of 2024. 65 wins, 11 losses, 86% win rate. In the room, 18.7 for profit. On the alert service, 41 wins, 6 losses, 87% win rate, 12,002 profit. So pretty nice. Second quarter, similar. 65 wins, 14 losses, 83% win rate, a little low for me. Alert service, 35 wins, 6 losses, 85% win rate, but nice profits, 14.8, 11.7. All right, so then we move into May. And I kind of identified that I use this for the time spread. I did a webinar on time spreads, which was what I do over earnings. This kind of shows you what those were. Anything in yellow here is a time spread. But May, we had 15 wins and 2 losses, 88% win rate, 4,900, almost 5,000. And in the alerted trades in the room, we had 29 wins, 7 losses, 81% win rate, netted 5,700. So pretty close to the alerts in the room. As far as the profits are concerned, we took more trades in the room. But you can see we had a 100% loss in time spread here. But the time spreads actually produce generally pretty good profits. 71% here, 50% here, 60% here. They're a little bit higher than what you get with straight puts and straight calls when they work. All right, that was May. This is June. Again, you can see the numbers here. Very similar to all the other months as far as what percentage gains we make. We had 25 and 4, 86%. The alerted trades, we had 14 and 1 in June, which is really good, 92% win rate, 8,300. Made more on the alert service than the room did. And the room took a lot more trades. Here's July. Again, July trades room. That was so far, we've actually completed it now, 22 and 4, 85% win rate. The alerted trades had a little bit of a weak month, 12 wins, 4 losses, 75% win rate, still netted 3,300. So still pretty nice. We had some nice time spreads in July. And we did take some losses. We take losses every month. We usually have, I don't think I've had a month with no losses. I'm not sure. I may have one. And this was our August trade so far, 10 wins and 1 loss in the room. And alerted trades, 5 wins, 0 losses in the room, 29.92, 38.77. Month is just getting underway. And so here's what we've done with August so far. Okay, so that's that is the results of what we've done in the room and on the alert service using the Compass system and identifying high probability trade setups. Just so you know, this is the SPY super system. This talks about taking SPYs, Qs, and IWM trades intraday for very quick trades. These are basically usually 5 minutes to 30-minute trades. I quantified them in July, 16-0. August up through today was 27-4. I had 3 more wins today and no losses. So this is 30-4. And the nice thing about this is for anybody, and I mentioned this earlier, for anybody that is in the room or wants to come into the room but can't stay there all the time, this gives them an opportunity to make trades quickly using the SPY super system and not have to wait around all day. So again, and you only have 1 trade on at a time, so it's easy to manage. And I'm going to do some videos on these for folks who are interested. I've had a lot of folks trading in the room now using this to, along with the regular trades, they're doing these like when the market's kind of choppy or flat or there's nothing going on, they do some SPY super system trades to make some money. So let me just talk quickly about how we achieve these kind of stunning results that we get in the room. We were able to identify when institutions are driving a trade and when the market internals are heavily bullish and bearish. We've talked about this already at the beginning. This is critical. So we only make trades when both of these are in our favor, or at least when the institutions are in the trade. If the market internals are neutral, we'll still take trades that have the institutions in them. But if the institutions aren't in the trade, we're not in the trade. And how the compass system finds this, how does it identify these institutions? It looks at what's called a triple screen assessment. You might know it as a fractal or multi-time frame comparison. We looked at 3 things. We look at momentum, and I've showed you the multi-current time frame and multiple time frame momentum, and then trend. We have current trend, multi-time frame trend, current time frame trend, and then a derivation of money flow. These are very critical. And when all of these are moving in the same direction across the current time frame and multiple time frames, it's the likelihood that the institutions are driving that trade is astronomically high, 95% or more that they're in the trade. So what I'm going to do is I'm going to show you some charts before I get to the offer that we have. I want to show you some charts of trades that we took, and I want you to see the compass system set up and why we took the trades. This was an ALB short we just took a couple days ago, right here on 12th of August. We've got 28% profit. We took it overnight. If you see here, you see this compression. You see that first thing you notice is everything's red. That tells you immediately the institutions are selling ALB. They were selling it here too, but it wasn't going anywhere. But this tells you the selling is going to take it, eventually it's going to take a toll. And down it came, and we caught it right here. And they had earnings right here. So we caught it right here on this breakdown, and we sold it right here. 28% profit, just holding it overnight for 2 days, and we took ALB as 28% profit. This was workday that we had. This was a day trade, a 5-day trade using the daily chart. Okay, you see we actually took it right here. It was blue here and blue here. Now the multi-time frame went to yellow, so I had to be aware of what was going on, but the current time frame stayed blue. So I stayed in the trade. Yeah, it's got, again, these are Heiken Ashi candles. It had a nice Heiken Ashi flat bottom here and moved up nicely. And so I stayed in this trade for 5 days for 30% profit. And you see this was chopping back and forth. So I have to be aware that there may be some selling coming, but it never came. And so I just stayed in the trade for 5 days. MDT, same thing. Here we go from yellow. This is bearish. This tells you, notice we had a green multi-time frame and a yellow current time frame. This tells me that the institutions are not in the trade. We don't have confirming colors. Then it went to blue. Blue and green is bullish. Red and yellow is bearish. The institutions got in here. So now I know the institutions are in the trade. I can see that it's right on the 15 EMA, this little green line. I buy it right here, and I ride this up for 25% profit on a swing trade. And you notice how nicely this thing just kept going up. BKTX, same thing. Everything's green, institutions are buying. Here's a breakout right there. So I buy it right here, and I take 30% in 3 days. Not a big, huge move, but a decent move. This was an overnight trade in McDonald's. Get in at 8:30, out for 11:30. This is a daily chart. This is where we get in right here. This is everything's green, and we know the institutions are buying this. So our job is to find out where's the best entry for us. And this shaded area right here is a what's called a dynamic compression zone that the compass system produces. And you see we broke out of it. That's what we took the trade when we broke out of the dynamic compression zone and ran it up. Got in at 8:30, $8.30 overnight in the afternoon, and get out $11.30 the next morning, a 37% gain. All right, let me see here. Do I option trades only off the 1D chart, or do you use multi-time frame? Well, the multi-time frames, when I'm looking at the day trades or intraday trades, when I'm going to take a trade and I want to be able to keep it overnight, then I look at the daily chart. The daily chart's going to be bullish, but I don't go to multiple days. I use a day chart, and I use a 5-minute chart, and then I use the compass system to tell me what's happening as far as institutions across multiple time frames. If I'm looking at a daily chart here, this multiple time frame momentum that shows here, this is the 1 day, the 3 day, and the 9 day. That's telling me that all three of those time frames, 1 day, 3 day, 9 day, are all moving up in the same direction. This is telling me that the 1 day is bullish, obviously, but this is telling me multiple days are bullish. And this is a multiple day trend here as well. All right, but I don't go to like a weekly chart or a monthly chart. Moderna, nice breakdown of Moderna again. Institutions selling. You know they're selling. You try to find the best spot you can. We picked it up right here, and we took a 33% profit overnight in this thing. And Amazon, here's another Amazon with a pop out. We can see how it's breaking out here right off the 15 EMA. Took this, and we made a 32% profit. We actually only traded intraday on that one candle right there. JD, this is one of the Chinese stocks. See how this is breaking down to the dynamic compression zone? You notice it went from green, bullish, to bearish. Current time frame went from bullish to bearish. Multi-time frame was already bearish. This is where we took the trade. 61% profit on this nice big drop in this JD. Dollar Tree right here, same thing. We just traded this day on the day of this drop, 25%. Look at the selling that's going on with Dollar Tree here. I mean, it's obvious that the institutions are selling the heck out of this thing. And Datadog, same thing, breaking out of dynamic compression right here. See the shaded box? See how we get yellow and red across the board? 21% profit on DDOG. This is how I find the trades that I'm going to alert on, and how I take what I take in the room. This was a nice popping crowd here. Again, see, we get yellow and blue here. We get yellow and blue. So I took it right on the blue and blue, and then it switched to yellow. I couldn't know that was going to happen, but it makes me aware that I need to watch now to see if it comes back. But it didn't. I mean, it came back a little bit, but didn't come back much. And we made 20% profit on this particular trade on crowd. Amazon 32%. This is a 5-minute chart, by the way. Now this is the 15 EMA. This is one of the support levels I use. You see how it broke here with this what's called a pop out of the box symbol, telling me that the stock is breaking out of compression. Everything's green except for the long-term trend, which I'm not worried about because I know that the trend early was bearish. But I know everything is green here, so the institutions are in this trade. I get it right here. I took 32% in 45 minutes on this break right here. It just kept moving right up, right up. As it gets extended from the 15, then I'm going to think about taking profits. And I took them off right here, but it kept on going a little bit more. ENPH took 20% in an hour here. See the 15 EMA right here, and then a pop out of the box. This pink line is the VWAP that I talked about. That's the volume weighted average price. We're only going to go short if the stock price is below that. It was. It also was below the 15. So this is where I took it, right off the 15 EMA. And we were in this for an hour and made 20%. Nice drop. Institutions are selling the heck out of this thing. I mean, it's obvious that they're selling the heck out of this thing. And if you don't have this information, you're at a loss. You just don't know. You may think you know, but you don't know. This is Verizon. We made 50% in an hour on this one. Notice how it broke below the VWAP. Institutions are selling. See the red? We bought it here. I actually paid 45 cents, $45 a contract for this. And we get out back in an hour at 67 cents a contract. Went from 45 to 67. 50% gave 10 contracts, $450. Out an hour later for $670. Pretty nice. Whoops. Hold on just a second. Sorry about that. We had a UPS man come to the door. My dog doesn't like that. So this is the SPY super system right here. SPY super system is, this is it's always off the 5-minute chart. So what I'm looking for is, in this particular case, the institutions were selling the SPY. You can see it's red. It's coming off the 15 EMA. It's below the VWAP. So I take the trade right here as it comes off the 15 EMA. I actually took it back at right here and rode this thing down. And then once it reverses, I'm out. So this is what the SPY super system looks like. And something like this can get you, 40, 50, 60 cents, $1, $1.10. You can make some good money on these if you know the criteria, which again, I have a specific setup on how to do these. All right. And this was a Netflix trade, breaking down below the VWAP right there, buy it right there, out here for 20%. 5-minute chart, everything's bearish. See how it went from blue to green, from blue to yellow, bullish to bearish. That gives me my confirmation that the institutions are selling. I get in right here and it keeps on going down. All right, and this was Tesla. This was another one. We traded this here short below the VWAP. We get a nice little entry right here as it goes from blue to yellow. We buy it, it comes down. I get out right here at the end of the day. And this was a Tesla trade we took overnight. We had the 5-minute chart showing us a pop out of the box symbol or a bearish breakdown right here. We took it short because everything was being sold. It's yellow and red, and we got lucky. We got a gap down from 120 to 112. So we took a big profit on that. I don't even know what the percentage was. It was a big profit play. Michael says, looks like you could trade SPY every day. Yeah, you can. You can. Some days are better than others. And what I do is, Michael, just so you know, on the SPY super system, I look at the Qs, the SPY, and the IWM. And if I'm going to go long, I take the index that's the strongest for the day, but also doesn't have any close by resistance. And if I'm going to go short, I take the index that's the weakest for the day if it doesn't have any close support. So, but yeah, you can take trades every day of this. I mean, I take trades every day. I took 3 today. Some days you can get more than others. If it's choppy, you got to get in and out fairly quickly. But it's a really good system. I try to emphasize it in the room a lot more. I'm going to do some videos on it, but it's a really great way for folks who want to trade indexes. Some people don't want to trade like that, but there are some people that do. Okay, and this was a Tesla. We've seen this one before. And this was QSR. This just I show how I use the daily chart and the 5-minute chart together. Notice here's QSR. You see how it goes from yellow to blue? Institutions are in here buying. I know it's bullish. Now I want to trade it bullish. Okay, where do I want to get in? This is a 5-minute chart right here. This is a 5-minute chart. It's riding along the 15 EMA. It goes from red to blue, so it's bullish. I look for this pop symbol right here as the stock breaks out of compression. I take it right here. That's my trade entry, and I just ride it right up until it starts to show some weakness again. That's how I trade. Using the daily chart, bullish, 5-minute chart, bullish. Where do I enter? And that's where I enter right there. So again, I just to recap, this is what we do in the room: straight calls and puts, debit spread using weekly expiration, time spreads, which we use over earnings. It's a really non-directional, nice trading setup. It has a very good win rate, and it also has very good profitability. You have losses, of course, but the criteria are very specific. Weekly ATM, again, to make some money selling puts every week against a longer-term dated put, and credit spreads, and the SPY super system, which to me is really a great way for folks who just want to come and go and not have to be tied down all day. They can just come in, find this, if they know the setups, and I have very specific criteria on how to do it. I have a video on it all. I talk about it in the room all day. It's a great way to make some money trading that. All right, so that's that is the presentation on the Compass system using the alert service and the room, the Compass options room, which by the way is open. I'm there every day from market open to market close. I wasn't today. Because I was doing a webinar. I left at 3:30, but generally I'm there every single day from market open to market close. Not too many rooms do that. So this is what we are offering right now. This is really some pretty good deals if you're interested. This is the alert service right here. The alert service is $4.98 for a quarter, $14.96 for annually. Lifetime if you just want to sign up and be on there forever, 24.96. But pretty nice deal. And you saw the profitability and the win rates we've got in the alert service. It's really well worth it. You also get a month in my room. You also get, we have a Discord chat room with 2 other professional traders who will answer questions. You can get on there and talk live. They post charts of high probability trades with annotation on it, and they go over all of the sectors each day of which ones are leading the market, which ones are trailing. And then I have all these videos, about 28 videos, and all the compass indicators, how to use them, the high probability trade setups, the funnel, what I call the funnel. Then I have a video on what's called Top Gun, which shows you once you find some really high probability trades, how do I find the best setups technically. I go through the technical analysis of those particular trades. So that's for the alert service. The room itself, the options live trading room, is $11.98 for a year. Really a good price considering we made $60,000 last year, and monthly at $148 if you want to do it for a month. Month isn't really an awful long time. I'm not sure you'll get a complete flavor for it, but it's a good way to try it. And again, obviously you get the live trading room access. You obviously get the Discord, instant messaging, where all the trades that are posted in the room and the go out and alerts are also posted in the Discord room. And you get the videos that we talked about, a wise way to trade options. And then if you want to get the Compass system itself, the Compass Options Trading Room, which is a software that goes on Thinkorswim or Ninja, the one that'll look exactly like mine. You can get it for $12.49 for a year, $5.98 for a quarter. It's gonna look exactly like the ones I just showed you on the screen with Thinkorswim. And you get my workspace, so it's gonna have all the indicators on there that I have. You also get scanners. I have multiple scanners that I didn't even show today in the Thinkorswim platform that I come off of the Compass system. And you get a month in the live trading room. You get the Discord, of course, and the video. So this is the actual Compass system that runs on Thinkorswim. It also runs on Ninja. If you want to trade futures and you have Ninja, you can put it on Ninja. It runs on both those. Again, the right line technical folks will put this on the machine for you. And when I had to put on, I didn't want to mess with that. They logged into my machine, they loaded up the Compass system on my machine. 5 minutes later, it's boom, it's done and ready to go. So they put it on the machine, or they'll put it on Ninja if you have a Ninja platform to trade it on there. It's called the Money Flow Tracker on Ninja, but for Compass, it's called the Compass system runs on the Thinkorswim platform, which is what I use. All right, so those are the offers that we have today. Again, the options alert service, $4.98 or $14.96. Lifetime, $24.96. And then the trading room and the Compass system. Those are those 3 things. I think in the chat box, we've got the links. Yep, they have the links in the chat box to the all of those offers that I just covered right there. Do I trade futures, Micah? I don't. I used to trade futures. I mean, you can actually trade futures on Thinkorswim, but you can use the Compass system to trade futures. And most people that trade futures that I know of use Ninja, so they run it on the Ninja platform. But I mean, obviously you can trade futures. I particularly trade the SPY, the Qs, and the IWM, but you can trade futures just as easily. Okay. So that kind of wraps it up. I think a little bit over my time, but I think I was the last presenter, so I didn't want to step on anybody's toes. But again, I appreciate everybody coming to the webinar today. I hope the information on the Heiken and Ashi candles will help you a lot. You'll get a video recap of this, replay of this, so you can see go over in detail the Heiken and Ashi that we talked about. I had to kind of run through it fairly quickly, but if you haven't heard about Heiken and Ashi candles, I think this will give you a little bit of a leg up on that. You're welcome. Carol, thank you very much. Appreciate it. Appreciate everybody coming to the webinar. I know it's been a long day. If you listen to the Traders Corner, I appreciate Traders Corner allowing me to come in here and make a presentation on the Heiken and Ashi candles. I think that can be very helpful to your trades. So thanks very much, everybody. Have a great evening. Good luck in the market. I hope to see some folks in the trade room in the alert service here in the next couple of days. And we'll see everybody, or if you're in the room, I'll see everybody tomorrow morning about 9 o'clock. Have a good evening.
Thank you, David. That was, of course, amazing. Thank you. That was some great information. Those Ashi bars, along with the information shared, are extremely powerful. Ladies and gentlemen, if you want to receive trader alerts on trades that has a track record of a 90% chance of being profitable, whether the market goes up, down, or sideways, it's important to know that professional options trader David Wise of Right Line Trading has one of the hottest alert services out there. So you may want to give it a try. We've placed David's special offer link in the chat box. David, thanks again, and congratulations on putting up those numbers that you've been achieving. And thanks for joining us here on Traders Corner. Well, ladies and gentlemen, that concludes today's presentation on Traders Corner. We will be posting the recording to our YouTube channel, and that is our link. I just put that in the chat. So feel free to subscribe to our channel there, and you'll be alerted if any new videos popped up. And yeah, thanks so much. Thanks for joining us, traders. We hope you gained some valuable information and that you'll be able to put this to use this week. Have a blessed evening and a great week, month, and year of trading. So long, traders. We really appreciate you.